ever hear someone say, like, the government's printing money? And you ever wonder if they're, like, being serious?
Yeah.
Like, are they being literal? Well, today we're diving deep into what that actually means. And
Yeah.
trust me, it's a lot more interesting than just, like, hitting crinkle plus P on a stack of Benjamins.
Yeah, you hit the nail on the head there. The phrase printing money gets thrown around a lot, but most people don't really understand what it actually means.
Okay, so let's break this down for our listeners then. We're not actually talking about, like, physical printing presses just churning out cash, are we?
Not exactly.
Where does the power to, like, print money actually lie?
It's a good question. While physical bills do exist, the control over how much money is circulating in the U.S. economy lies with the Federal Reserve, or, as most people know it, the Fed. And they don't need ink and paper to influence the money supply.
Oh, okay.
They've got these things called monetary policy tools.
Monetary policy tools.
Yeah.
Sounds kind of intimidating. Can you maybe break down, like, what those tools are and how they actually increase the money supply?
Absolutely. Imagine the economy is like a swimming pool, and the water in that pool is the money supply. The Fed has three main ways to add water to that pool.
Okay.
One is by easing reserve requirements for banks. This essentially frees up more of the money banks already hold, allowing them to make more loans.
So it's like shifting money around rather than, like, creating new money out of thin air.
Precisely. Now, the second tool the Fed has is adjusting the discount rate. This is the interest rate that the Fed charges banks when those banks need to borrow money.
Mm-hmm.
And by lowering this rate, it encourages banks to borrow more, which ultimately injects more money into the system.
Okay, I see. I'm
Yeah.
starting to see how the Fed can, like, influence things behind the scenes.
Yeah.
But what's that third tool? Is this where we actually get to the, like, the printing part?
Not quite. The third tool is called open market operations. And this is really where things get interesting. The Fed buys or sells Treasury securities, which are basically government bonds, on the open market. And when they buy these securities, they pay using electronically created funds, which essentially injects new money directly into the system.
So it's kind of like adding water to that pool we were talking about, but digitally?
Exactly.
They're creating new money electronically to buy these bonds, and then that new money flows out into the economy.
Yeah, that's a great analogy.
Huh.
And it's important to understand that this isn't some shady backroom deal. These operations are conducted openly and strategically to influence economic conditions.
This is fascinating stuff. I bet most people listening have no idea that this is going on behind the scenes of their everyday lives.
You're absolutely right. And that's why we're diving deep into this topic.
Hey, before we get too much deeper into this, so we just want to say a huge thank you to all of our subscribers out there.
Yes.
Your support means the world to us and allows us to keep bringing you these deep dives. If you're enjoying the show and haven't subscribed yet, hit that button.
Yeah.
We promise you won't regret it.
Now, back to the printing aspect. You mentioned physical dollar bills earlier. There's got to be an actual printing process somewhere, right?
Oh, yeah, for sure. I can't imagine it's all just digital ones and zeros.
Right.
So who's actually in charge of the paper money we all carry around?
Well, you're right. Physical currency does exist, and someone has to print it. That responsibility falls to the Treasury Department's Bureau of Engraving and Printing. Think of them like the factory workers following the Fed's instructions.
Gotcha. So the Fed basically sets the money supply through these policy tools, and then they tell the Treasury how much physical cash to print based on, I guess, their calculations or whatever.
Yeah, that's basically it.
Okay.
The Bureau of Engraving and Printing designs, manufactures, and distributes all the paper money in the U.S., but they're doing so based on what the Fed tells them to do.
Yeah.
But did you know that the 2023 order was revised to include more $2 bills?
Wait, seriously, why?
Yeah, they're actually a lot more popular than you might think. It just goes to show that even in our increasingly digital world, physical cash still holds a certain appeal.
Okay, so we've established that the Fed controls the money supply through these, like, behind-the-scenes tools.
Right.
And the Treasury handles the actual printing of physical cash based on the Fed's orders. But things must get a bit more intense when the economy hits a rough patch, right? Like, what happens during times of crisis, like the 2008 financial meltdown or the recent pandemic?
That's a great question. And you're right, things do get a bit more dramatic when the economy is facing major challenges. In those situations, the Fed might need to resort to more aggressive measures.
Okay.
And one tool they have in their arsenal is quantitative easing, often shortened to QE.
QE, that sounds intense. What exactly does that entail? Is it like hitting the print money button on overdrive?
It can feel that way, yeah. QE essentially involves the Fed buying large quantities of assets like Treasury bonds and mortgage-backed securities.
Right.
And this large-scale buying spree pumps liquidity into the markets, and aims to lower long-term interest rates.
So it's like open market operations, but on steroids? They're injecting a massive amount of money into the system to try and, like, get things moving again.
Yeah, you could say that. It's a very powerful tool designed to stimulate the economy and prevent a full-blown collapse.
But I imagine a tool that powerful doesn't come without risks.
Oh, of course not.
And I bet there's a lot of disagreement about when and how to use it.
Right. You're spot on. QE is a highly debated topic. Some economists fear it could lead to runaway inflation, while others argue that it's absolutely necessary to prevent deeper economic disasters.
This is getting pretty complex.
Yeah.
So we've covered how the Fed manages the money supply.
Mm-hmm.
But why does all this even matter to our listeners? Like, how does it actually affect their everyday lives?
Well, that's the million-dollar question, right? It's easy to get lost in all the technical stuff, but the truth is, the Fed's decisions impact everyone. And, I mean, every corner of the economy.
So it's not just some, like, abstract concept happening in a financial ivory tower or something.
Not at all. These decisions directly impact interest rates, inflation, and the overall health of the economy, which ultimately affects things like how much you pay for a mortgage, a car loan, the value of your savings, even the prices you see at the grocery store.
Okay, now you're talking my language.
Yeah.
Give us some, like, concrete examples. How does all this, like, printing money business actually affect our listeners' wallets?
Well, let's start with borrowing costs. When the Fed increases the money supply, it can lower interest rates. And that means that banks can offer loans at more attractive rates, which makes it cheaper for you to finance a house,
Right.
buy a car, or even just like make everyday purchases on a credit card.
So if I'm thinking about buying a house, I should be keeping an eye on what the Fed's doing.
Absolutely. Their decisions can have a significant impact on your monthly mortgage payments.
I see.
And on the flip side, when the Fed decreases the money supply, interest rates tend to rise, which makes borrowing more expensive.
Okay, and what about the impact on savings, though? If the Fed is essentially creating more money, doesn't that devalue the money I've already saved?
That's a valid concern. If the money supply increases too rapidly, it can lead to inflation, which basically erodes the purchasing power of your savings. That dollar you tuck away today might not buy you as much tomorrow if inflation takes hold.
So there's like a delicate balance the Fed has to strike between stimulating the economy and keeping inflation in check.
Exactly. It's like walking a tightrope. They need to find that sweet spot that keeps the economy humming along without letting prices go crazy.
That sounds like an incredibly tough job. No wonder people have such strong opinions about the Fed and what they do.
It is a challenging job, and one that comes with a lot of scrutiny, but it's also a crucial job as the Fed plays a vital role in maintaining a stable and healthy economy.
Now, I know we've been focusing a lot on the Fed's role in all this, like, printing money business, but let's circle back to the Treasury Department for a sec. They're the ones actually printing the physical dollar bills that we all use, right?
That's right. They're like the production arm of the money supply system. They're responsible for designing, printing, and distributing all of that physical currency.
But they operate under the Fed's guidance, though, right? It's not like they can just decide to print a bunch of extra cash whenever they feel like it.
Exactly. The Treasury works very closely with the Fed to make sure that the amount of physical currency in circulation aligns with the overall money supply targets set by the Fed. It's a fascinating partnership, really.
Yeah.
One controls the amount, the other handles the physical creation.
So it's like a well-choreographed dance between the Fed and the Treasury to keep the money flowing smoothly through the economy.
That's a great way to put it. And it's a dance that's been going on for over a century, constantly evolving to meet the changing needs of the U.S. economy.
Wow. Okay, so we've covered the what and the how of printing money. But I think it's time to tackle the why. Why does the government even bother with all of this? Why not just let the free market,
Sort things out.
sort things out?
That's a really fundamental question that gets to the heart of what money is and why it matters. Money, at its core, is a medium of exchange. It simplifies transactions and allows us to trade goods and services efficiently.
So without money, we'd be back to, like, bartering chickens for haircuts.
Pretty much. Money acts as a common denominator that makes our complex modern economy possible. But the real question is, why does the government need to control how much money is in circulation? Why not just let the invisible hand of the free market do its thing?
That's what I'm wondering, too. Isn't the government, like, Meddling with something that should just be left to the forces of supply and demand?
Well, it's not quite that simple. The amount of money in circulation directly impacts the value of that money.
Okay.
Too much money chasing too few goods can lead to inflation, which can destabilize the entire economy.
So it's like a game of supply and demand, but with money instead of products.
Yeah.
If the supply of money outpaces the supply of goods and services, prices go up.
You got it. That's why the government, through the Fed, aims to manage the money supply to keep inflation in check while also ensuring that there's enough money circulating to support economic growth. It's all about finding that delicate balance.
I'm starting to see the big picture here, but I think we need to bring this down to earth a bit. Can you give us some real-world examples of how the Fed's actions around the money supply impact everyday people? I mean, how does this abstract concept translate into something tangible that our listeners can relate to?
All right, so we've covered the mechanics of how the Fed manages the money supply, but I think it's time to kind of zoom out and look at the bigger picture.
Yeah.
I mean, this whole concept of printing money to influence the economy, that's not exactly new, is it? Haven't governments been doing this for centuries, and sometimes with disastrous results?
You're absolutely right. The history of money is full of fascinating stories, and printing money has definitely played a big role, both good and bad. To really understand the current debates and controversies surrounding monetary policy today,
We really need to look back at some historical examples of when printing money has been used and what the consequences were.
okay, history buffs, get ready. Where do we begin our journey through the annals of monetary history?
Well, one of the most infamous examples, and it's a cautionary tale you'll find in pretty much every economics textbook,
Okay.
is the Weimar Republic in Germany during the 1920s.
Ah, yes, the Weimar Republic. I vaguely remember learning about this in school. Wasn't that a case of hyperinflation gone wild?
It was. After World War I, Germany was in a really bad spot. They had massive war debts and reparations they had to pay, and the government was desperate to meet its obligations.
Right.
So they started printing money
Oh, no.
at an alarming rate.
I'm guessing that didn't end well. Printing more money doesn't magically create more wealth, does it?
It doesn't. In fact, printing too much money without increasing the amount of goods and services can lead to the opposite effect. And that's exactly what happened in Weimar Germany. That oversupply of money caused prices to absolutely skyrocket, leading to hyperinflation. People literally needed wheelbarrows full of cash just to buy basic things like a loaf of bread.
Wow, okay. That is a truly sobering example of the dangers of uncontrolled money printing. Really underscores the importance of responsible monetary policy.
Absolutely.
Finding that delicate balance that we were talking about earlier.
It does. The Weimar Republic is a stark reminder that while printing money might seem like a quick fix in a crisis, it can have devastating long-term consequences if it's not managed carefully.
Okay, so we've seen a really dramatic example of what can go wrong.
Right.
Are there any historical examples where printing money was actually successful? Were there times when it actually helped to stimulate the economy without leading to a disaster?
There are. The U.S. government's response to the Great Depression in the 1930s involved increasing the money supply.
To try and stimulate economic activity and pull the country out of that deep recession.
That was a pretty bold move, considering what happened in Weimar Germany just a few years earlier. Did it work? Did increasing the money supply actually help to, alleviate the Great Depression?
Well, that's a complicated question with no easy answers.
Okay.
Some economists argue that it did help, that increasing the money supply eased the severity of the Depression. But others believe it actually prolonged the downturn. It's a debate that continues even to this day.
So even in cases where printing money was used with good intentions,
Right.
the outcomes can be mixed
Yeah.
or often debated.
Exactly. It's a powerful tool, but it needs to be used very carefully. There's no one-size-fits-all approach,
Right.
and the specific circumstances need to be considered very carefully.
Okay, so history has shown us both the potential benefits and the very real risks of printing money.
It's clearly not a simple solution to economic problems. But let's bring the conversation back to the present day. What are some of the current debates and controversies around the Fed's monetary policy right now, especially in light of everything we've discussed?
Well, one of the biggest concerns these days is inflation.
Yeah, makes sense.
We've seen inflation rise significantly over the past few years, and some people argue that the Fed's actions, particularly the quantitative easing programs they used during the pandemic, have actually contributed to the problem.
Yeah, that's a really hot button issue right now. I've heard people arguing that the Fed's policies have been like too loose.
Right.
They've pumped too much money into the economy and basically created an environment where inflation can thrive.
That's a valid concern. It's a balancing act.
Hmm.
On the one hand, the Fed wants to support economic growth and create jobs, but on the other hand, they need to be very careful about not causing too much inflation.
And it seems like they're under a lot of pressure from different sides.
Yeah.
Some people want them to raise interest rates aggressively to fight inflation,
Hmm.
while others worry that doing that too quickly could trigger a recession.
Yeah, exactly. It's a tough spot to be in. And to make things even more complicated, all of this is happening against a backdrop of a global economy,
Right.
where things that happen in one part of the world can have ripple effects everywhere else.
So the Fed doesn't operate in a vacuum. They have to consider how their actions might impact other countries and, like, the global financial system as a whole.
Absolutely. It's like this complex web of interconnected factors, and the Fed has to carefully navigate it all, weighing the risks and rewards of every single decision.
After this deep dive, I definitely have a new appreciation for, like, how complex monetary policy really is.
Oh.
It's definitely not as simple as just printing money, that's for sure.
Mhm.
There's a lot of history, theory, and real-world consequences to think about.
I agree. It's a fascinating field, constantly evolving, and it's one that really deserves our attention and that we try to understand it better.
So what's the key takeaway for our listeners today? What should they be thinking about after this deep dive into the world of printing money?
I think the most important takeaway is that printing money, or more accurately managing the money supply, is a powerful tool that can be used for good or for bad. It can help stimulate economic growth, but it can also lead to inflation if it's not managed responsibly.
And it's something that affects all of us, whether we realize it or not. The
Absolutely.
Fed's decisions influence interest rates, inflation, and the health of the economy,
Right.
which all comes back to our personal finances, our jobs, our lives.
Exactly. So stay informed, stay engaged, and keep asking questions.
Hmm.
The more we understand about these systems, the better equipped we'll be to navigate them and make good decisions.
Well said. I think that's a perfect note to end on. A huge thank you to our expert for sharing their insights with us today. It's been an incredibly enlightening conversation.
Thank you for having me.
And to all of our amazing subscribers out there, thank you for your continued support. It truly means the world to us, and it allows us to keep bringing you these deep dives into all these fascinating topics. If you haven't subscribed yet, what are you waiting for? Hit that button and join our community of curious minds. And until next time, keep learning, keep exploring, and keep diving deep.
Exactly.